Hi everyone, we're solving for the problem 10-12A today, so let's just go ahead and get started. Laverne purchased a new piece of equipment to be used in its new facility. The $355,000 piece of equipment was purchased with a $35,500 down payment and with cash received through the issuance of a $319,500 7% 5-year mortgage payable issued on January 1st, 2017. The terms provide for annual installment payments of $77,923 on December 31st. So, the first thing we're going to do is we're going to put in the principal balance, which is going to be $319,500 because that is the price that we have the company has left to pay since they've already put down a $35,000 500 down payment. Next, we want to put in the cash payment, the yearly cash payment of $77,923. And note that this $77,923 is going to be the same for all 5 years. So to find the interest expense, we are going to take the principal balance. So the principal balance is $319,500, and we are going to times that by the amount of interest, which was 7%, and that is going to give us $22,365. Now to find the reduction of principal, and I'm just rounding this since we have been asked on this problem to round to the nearest number. So that's all I'm doing here. So the reduction of principal is going to be the cash payment of $77,923 minus the interest expense that we just found, which is $22,365. And that gives us $55,558. So now to find the new principal balance, we're going to take the previous principal balance of $319,500. So that's I3, and we're going to subtract the reduction of principal of $55,558. So that gives us $263,942. So now we're just going to repeat that same process for the next row. So we know that this is going to stay the same. And so for the interest expense, again, we're going to take the principal balance from the previous year, so $263,942. We're going to times that by the amount of interest, which is 7%. And that gives us $18,476. So again, to find the reduction of principal, we are going to take the cash payment of $77,923, and we are going to subtract the interest expense of $18,476, and that is going to give us the reduction of principal of $59,447. So again, to find the principal balance, we are going to take the previous principal balance of $263,942, and we are going to subtract our reduction of principal, $59,447, which is going to give us $204,495. So you can just repeat that same process for the rest of the cells here. So I'm just going to copy and paste this in. Whoops. Oops. So as you can see, it's just the cash payments always stay the same, and the interest expense will get smaller each and every year, and the reduction of principal increases with each year, but the principal balance gets smaller. So that completes this portion. So we'll move on to part 2. So account titles and explanation. We've been asked to prepare the journal entry related to the notes payable for December 31st, 2017. Prepare the journal entry related to the notes payable for December 31st, 2017. So note that this is only the first year. So we're going to use the interest expense from the first year, and we're going to debit that. So if you remember, the interest expense was $22,365. And since this is a mortgage payable, we're going to also debit mortgage payable for the amount of the reduction of principal, which was $55,558. And then since we are making a payment, we need to credit cash, and that's going to be for our cash payment amount of $77,923. And that completes the journal entry. So now moving on to part 3, we've been asked to do a balance sheet presentation for this obligation for December 31st, 2017. So in the balance sheet, the company reports the reduction in principal for the next year as a current liability. So the account title is going to be current liability. Current liabilities. And since it's a mortgage payable, that's what we are going to show. And since we do use the next year's, we don't want to use the first year's reduction of principal. We want to use the second year's reduction of principal. So that's going to be $59,447. And then we need to show the long-term liabilities of how much we have left to pay on this note. Oops. Penalties. So again, it's just going to be mortgage payable. And in the balance sheet, we also classify the remaining unpaid principal balance as a long-term liability. So that's going to be the second year's principal balance as well, which is $204,495. So then we will have our total liabilities, and that should equal the first year's balance of $263,942. Alright, you guys, that completes this problem. I hope this was helpful. If you have any more questions, please feel free to leave a comment in comments below, and I will try to answer throughout the week. Thank you, guys.